Another thing that we've talked about in these videos is opportunities in the marketplace today. And if you recall, one of the things I discussed was something called an exchange-traded fund, actually a levered exchange-traded fund. And these are funds that try to replicate some financial assets performance. And we talked previously about an ETF or exchange-traded fund that mimicked the action of the S&P or the US broad market. And we talked about taking a short position in such an ETF 3 times levered to the market for the following reason. Firstly, obviously, the US market has been on a long positive stretch with very little volatility, almost artificially low volatility. And again, going back to the idea of reversion to the mean, the idea is that something that's done very, very well might do less well in the future. And so we think the US market, which has done very, very well out of the financial crisis, is likely to do less well. But further to that, these exchange-traded funds, these levered exchange-traded funds, the way they're structured, they have to rebalance their portfolio every day. So when you introduce volatility in the marketplace, as we've started to encounter in the last few weeks, it means that on their daily rebalance, they're forced, on a big down day, they're forced to sell contracts reflecting their underlying asset, and on a big up day, they're forced to buy. So they're doing the opposite of what a value investor does. They're buying high and selling low. So even if the marketplace does not roll over and fall immediately, benefiting the short position, the natural decay of these levered ETFs from the mechanism that I'm describing means that their value should deteriorate over time. And you've seen many examples of that. Certain exchange-traded funds that have had a significant erosion in value. So we have these in place in our portfolio as hedges for our long exposure, but also as items we're hoping to benefit from this decay that I'm describing, irrespective of the market going down. All we're counting on is it being volatile over time, which of course it is, and we would benefit as a short seller.